Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcast.
Now, just to move forward before we take any more questions, a couple of things just to kind of take note of, and hopefully that you guys have sort of gleaned over this throughout this presentation. We really want to simplify our approach, because what it comes down to is, just is managing your trades effectively, and just keeping in mind your risk versus reward, your risk versus reward ratios. Create a checklist for yourself as you analyze the price chart. It's very easy for you to create a watch list of these 6 ISE-FX currency pairs, and just take a few minutes each day and have a look. Tune into our FX market outlook, draw a few trend lines on your charts, for yourself, so that you get accustomed to identifying these areas, and then just create a checklist as far as your trade entry is concerned. If A plus B plus C all lines up, suggesting a directional bias to the upside, well, then you're going to want to go in and possibly look at buying some call options and creating a target to the upside to manage your position more effectively. We want to create a directional bias. We don't have to look at all of those clues right away. First off, all we need is one particular clue to sort of set the wheels in motion, and then once you have that, whether it's a MACD crossover, whether it's a 50% centerline crossover in the RSI, whatever it is, all you need is one, and then you just build a case from there. So creating your directional bias with that one sort of indicator, identifying a particular pattern, looking at your lower indicators to see if there's a confirmation, and then finally watching your price action with respect to signaling and entry. Remember that price action, again, in my opinion, is what is going to determine your trade entry. Is that behaving in such a manner that it's starting to break the higher highs and higher lows? And if that happens, then from a conservative standpoint, you now have the makings of a continuation to the upside or the downside into further support and resistance levels. So a couple of things to remember. Try not to overcomplicate things, and remember those pivot points, because those pivot points are the foundation with respect to identifying your trends, and also with respect to identifying support, resistance, and key trade entry and exit levels. Don't try to see what's not there. A lot of times people, particularly when they start analyzing price charts, a lot of times people will just try to convince themselves that there's a particular opportunity there. You really want to try to take a non-biased approach and just go through that step-by-step process. And if everything lines up, well then, hey, now it's time to go buy your calls, or now it's time to go buy your puts. But if that's not the case, you want to stand aside. You're better to do 2 really good trades and stay in business than do 5 sort of half-ass pardon the language, that kind of slipped out, but kind of an analysis that really wasn't effective, and get into the market inappropriately, and then have to manage those positions to the downside. And I think Steve would agree that they'd rather have you with them on for the longer time frame trading this market than just jumping in and out and being separated from your capital. So create a process for yourself. Don't rush into the trade. Be patient. Try to create that mechanical approach, and practice. What we suggest to all of our students is obviously attend as many webinars and educational sessions as possible, but you have to get in and draw these trend lines yourself. You have to understand, the rationale behind what we're talking about in order for you to understand how to manage your trades. So if that means, once a day for 10, 15 minutes, opening up your Options Express account or wherever it is that you're viewing these currency pairs, and just throwing some trend lines in and, seeing what's happening with these ISE-FX options currency pairs, then that's what you have to do. You've got to practice. So if you're interested, please feel free to send me an email. If you have any questions, of course, I'm always available to respond. So on that note, Steve, that's all I got for you tonight.
Jason, first of all, I want to say thank you. And of course, we want to take some questions, but thanks on behalf of the International Securities Exchange. You did a great job. You really enlightened us about technical analysis. And again, like you said, actively managing your trades, not getting into things that are over your head. That's really important. And each individual investor has to sort of come to their own conclusions. But, the more tools you have, the better. But I guess that sort of leads into my first question. And this is a question from Belinda. She wants to know, does RSI move ahead of MACD? Or do you have favorite indicators? I know that you were mentioning the Bollinger idea that you shouldn't use the same sort of concept over and over and over again. But, what do you think there? And how do you keep it simple, but yes, use some indicators?
Well, I pretty much highlighted it here. I look at the MACD and the RSI. I used to be a big fan of stochastics, but I've sort of developed, my own sort of approach. And obviously, since I'm educating people on it, my own sort of opinions tend to creep in. But the key is, you can take, I like the MACD, I like the RSI, I'm just looking for strength and trend and strength and price action, but ultimately I'm looking at that price chart as sort of leading me into a potential trade opportunity. But in saying that, if you just remember what I suggested with respect to the idea of Bollinger in terms of avoiding trying to use too many indicators, it doesn't hurt to experiment. There's no question about it. There's lots of literature out there that references specific indicators and oscillators. I think it's important to, not to overcomplicate things, not to bring too many things to the table. Number one, anybody who's tried to add 4 or 5 lower indicators to their price chart will know that your real estate is quickly eaten up, and it becomes increasingly difficult to analyze the actual price chart itself. So, if you just keep it simple, if you use 2 of them, and you kind of go through the motions. Now, you're not always going to find each indicator lining up perfectly. There has to be, a little bit of discretion involved in that sense, but your price action is really what's going to dictate your move. In fact, I know some guys that they don't even use those lower indicators when they're trading the futures market. I know a different market, but you tend to develop your own trading approach, and that's where that whole concept of practicing comes into play with respect to your technicals. See what works for you. Everybody sees things differently. This is a building block for creating ideas, and I find that they work very effectively. But as you sort of move forward with the education process, you may find something completely different.
Hey, Jason, does RSI move ahead of MACD, or do they move?
Well, RSI is a function of the price action in the sense that depending on the time frame that you're looking at, I use a shorter time frame as my one example, so it's going to be calculating things, depending on what you're using for your RSI, a little shorter as well. So you can see that with respect to our support and, our convergence divergence on the RSI, with the action we saw in the RSI, although we didn't get a 50% crossover, we saw that divergence taking place, which is a clue. Now, your price action tends to move after both your lower indicators. So in a sense that your MACD, your RSI, and the way I had it set up was giving you a little bit of a heads up. Your MACD sort of followed suit, and then that third sort of nail in the coffin was the price action. But also keep in mind that your RSI can maintain a position below that 50% level, and you can still have some fantastic bearish trade setups. So you're really keeping it simple, and you're looking at that RSI as sort of that 50%. That's that line in the sand, and it doesn't. If it's trading below and you get a MACD crossover to the downside, if it's trading below already, that's something that you can just digest and use that as sort of a further indication that there's a continuation of the trend of a trend to the downside.
Thank you for listening to our podcast.